What it do? What it do? Let's go ahead and get into this video. This will be a intro into quarterly theory, advanced concepts. Basically saying it is 4 quarters. Them 4 quarters is accumulation, manipulation, displacement, X, which means continuation or reversal. For Q1, what did we accumulate? We accumulate a bullish range with buy side, sell side, and equilibrium as a key level of liquidity that the algorithm will target. Manipulation. What did we manipulate? We manipulated yesterday's buy side liquidity and then took out yesterday's sell side liquidity. Displacement. We are looking for a displacement from this previous bearish range. So we are looking for sales. Right here, we will be looking to see if price wants to continue going lower or reverse. It is 4 quarters in a year. It's 4 quarters in a month. It's 4 quarters in a day. It's 4 quarters in an hour. And it just keeps on breaking down all the way to the 5-second chart. Time is fractal. I do this after every quarter is done. On the 1 minute chart, we have a AMD cycle every 90 minutes. So every 22 minutes, a quarter is ending, and I am marking out its high and its low and just being aware of those key levels. Okay, the secret sauce, my proprietariness that I stumbled upon just from studying the market every day. We have a 1 minute zone. This is a range. This 1 minute quarter, the data told me that we should stay inside of this range. We should not be going above unless we're grabbing liquidity or unless we're displacing to continue going lower in the higher time frame direction. For the 5 minute, it's the same thing. This is the high, this is the low, and all of these are targets because we use the 1 minute and the 5-second chart to get us to here, leave a runner to get us to here. Okay, with that being said, let's look at the bread and butter setup that I look for every day, which is a continuation of the previous quarter. Right here, we was bullish, we went bearish. Now we want to catch a continuation to continue going short. So we're going to drop back up. Yesterday was bearish. Whenever we get to equilibrium, we want to be looking to go short. Drop to the 15. London session was bearish. Whenever we get to equilibrium, we want to be looking to go short. Okay, we're on a 1 minute. We're grabbing liquidity to get to right here because everybody else been dropping from equilibrium. Well, in this case, liquidity grab, market structure shift, bread and butter setup, get in on a continuation. We want a 5 second button to say we can enter in right here on a 5 second chart. With that, what that look like on a chart with the 5 second button, it looks like this. The 5 second told us that this zone right here, price should not be going nowhere higher than this. Entry right here, stop loss would be the next high after this, which would be right here. Stop loss, first TP, second TP is right here. The 1 minute low and the 5 second low. Now for the second setup, which is a liquidity grab 1 minute reversal. We grabbing liquidity. We come to Q3. Now we're looking for a 5 second box to tell us that we can enter to go lower. Because once again, we at a 1 minute zone where we should be not going any higher. And we at a 15-minute equilibrium where we want to see price go lower from. In this case, we didn't get the button entry, but we got the market structure shift, bread and butter continuation. With that being said, I think that was more than enough. If you have any questions, get with me. But this is how we use the 1 minute chart and the 5 second chart for optimal trade entries and optimal trade exits. This is just the beginning